You're listening to New Retirement Radio, brought to you by the team at Prout Financial Design.
Hello, I'm your host, Certified Financial Planner, Dennis Prout.
I'm Heidi Cartwright, Financial Advisor and RICP.
Advisors associated with Prout Financial Design may be either 1. Registered representatives with and securities offered through LPL Financial, member FINRA SIPC, and investment advisor representatives of Integrated Partners, a registered investment advisor, or 2. Solely investment advisor representatives of Integrated Partners, a registered investment advisor and not affiliated with LPL Financial. Investment advice offered through Integrated Partners, a registered investment advisor. Integrated Partners and Prout Financial Design are separate entities from LPL Financial. Dennis Prout and Nathan Prout are solely investment advisor representatives of Integrated Partners and are not affiliated with LPL Financial. The opinions voiced in this show program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriately qualified professional before making a decision.
WTCM News Talk 580. Welcome aboard. It's New Retirement Radio with Prout Financial Design in Traverse City, Michigan. We have a whole panel today led by Heidi Cartwright. Welcome aboard, Heidi.
Well, thank you very much,
What's
Ron.
your title? I have to give you the title there. You're the Managing Director.
No, that's Nathan. I am the Executive Director.
Executive Director. There we go.
We like to switch things up just to keep you on point there.
But that's the firm. You're Executive Director of the firm. And then what
That
are
is
your,
correct.
What are your your financial credentials? All the
I'm
letters.
a financial advisor. I'm an RICP, which is a Retirement Income Certified Professional, and just rolls right off the tongue. And I'm also part of the Ed Slot Master Elite group, and among other licenses and criteria that I have. So
Lots of studying.
lots of continuing education.
Yes.
I'm always taking a test. That's true. But I wanted to just pause and say, as a morning listener, every morning on my way to work, I listen to you and Colleen, and I am going to miss both of you. I hope you're not tired of hearing that, but I would just add my voice to all those people that we've heard this week. You've always been kind and gracious to me as I joined the show many years ago. I mean, it was the old studio, which was a lot smaller. And then we went to the standing up studio while they were redoing this studio, and we had to stand during the whole show. And now we're in this beautiful new studio. And so
The Prout Financial Design Studio.
that's right. What a beautiful sign. But you had a lot of patience with me, both of you. I was learning the ropes and learning how to talk on the radio and participate in the program. And I think you're going to have a great adventure coming up, though. So I'm excited for both of you, a new part of life. And probably my biggest thing is I thank you for playing all of my song requests, even though they're rather goofy and a little bit odd. You always would fit
Here comes
them
the
in.
sun.
Yeah. So I just wanted to say that. And today with me, as part of the Prout team, I have Nathan Prout, who is our managing director. Good morning, Nathan.
Good morning. It's great to be here.
Yeah. And then we also have Beth Shire, who is our director of marketing. Welcome, Beth.
Thanks. It's great to be here. And also, I just want to echo, I don't have, who am I on? I don't have as long of a history here with you in the studio, but just absolutely appreciate the grace and the kindness that I have experienced. I've been in here about a year, so it's just fantastic, and it's great to walk through these doors every Thursday, and just the energy, the buzz, and it's just great. So you guys, thank you both, Colleen and Ron, so much for everything.
Thank you, Beth.
Absolutely.
Yeah.
By the way, our retirement
Yes.
It's on your backs. No pressure, but we're counting on you.
Literally.
So if we hear you on the radio again,
We'll be coming in for a visit.
Yes.
Okay, somebody just sent us a text and wondered if you guys are also retiring from the radio, and the answer is no.
No.
You are not.
No, we're not. And in fact, we have lured Ron back to continue as the co-host of the show. And
Well.
so he'll be here coming, he'll take a break. And then we're planning on Ron continuing to add to
You'll be
our
the
team
hosts.
here.
You guys all have all the expertise information. I'm just going to try to make behind-the-scenes work here smoothly.
That's right. And make
Yes.
sure that we are relatable and understandable. We don't get too techy in those financial terms.
So what are you talking about today?
Well, what we're talking about today is what they call a white paper. And this was distributed to us from our RIA, and that is Integrated Financial Partners. And they put out this white paper on how to get ready for the sale of your business. Now, we've talked about this topic before on the show and gone over this, but we have so many great entrepreneurs in this area, and we just wanted to address this once again because we're seeing a lot of turnover, like Mary's Kitchen Port isn't there anymore, things like that. So we just wanted to go over some tips for people if they are thinking about in the next 3 to 5 years of selling their business, how to start thinking about that, and what are some of the things they should start positioning themselves for. Because usually that decision starts quietly, or it could be sudden as well. It could be your health. It could be you're just so frustrated with certain things and you're like, I just can't do this anymore. Or it could be your spouse saying to you, how much longer are you going to do this? So things like that. So if you think you might want to sell in the next 3 to 5 years, you're in a powerful window and you still have control over how your business looks and how to prepare your family as well for this big step. So one of the things they think you should do is you need to start prepping that business for the possibility of sale if that's your intention. First, how clean and credible are your financials? And this is where, when you're a business owner, a lot of times you throw in some personal stuff. You might pay out of your business account. You might commingle some funds, and it gets all sorted out by the accountant. You want to start separating that to get some clean financials so that if someone wants to take a look at them, there aren't all those personal expenses or some of those things that are messed up in that information. You also want to show them if you have your profits, if you have consistent income. Those are all things that buyers are going to look at. You want to start thinking about how dependent is the business on you personally or on your personality, and start thinking of ways of how you're going to deal with that, and maybe how to bring on other team members or other people into that persona of who the business is, so it's not so much on you.
One time I talked to a small business consultant, and he said the first thing if you're going to start a business is have an exit strategy. First thing he said.
Yep.
And part of that he meant was if you intend to start a business, run it, and sell it, don't call it Bill's Pasta if you're Bill. Call it Acme Pasta, because, who wants to buy Bill's Pasta if it's all dependent on the business being about Bill?
I thought you were going to say Joe's Pasta.
Joe's Pasta, same thing. Nathan's
I'm Bill,
Noodle
but
Shop.
it's Joe's Pasta, So you also want to look at your leadership team. How attractive is that leadership team? Can they carry on what you have created? Can they carry on that business? And are they able and willing to do that? And then think about how much flexibility you have around structure, timing, taxes. And the strength of your relationship with suppliers and customers will be key in adding that value to the business when you're ready to sell. So when you start early, this allows you to create options and you can negotiate from a position of strength rather than just reacting under pressure. So those are some key things. So then they turn and they start looking. Let's look at what are the biggest regrets that people have according to their experience once they sell their business. Because if you're on the other side, you can start planning to avoid having any of these regrets. One is the financial regret. If focusing on the sale price, owners often realize too late that a small decision about how a deal is structured, when money is paid, how risk is handled, that can have a big impact. So also you want to look at your taxes. Is it better to get paid in a lump sum? Is it better to be paid out over a number of years? What are your needs? What is your financial situation? So that you don't have that regret. Oh, I should have held out for more. I shouldn't have waited. I could have gotten more if I sold quickly. All these things that come to play afterwards.
Yeah, even if you might be charitably minded as well, that would be an important consideration to write into that sales agreement if you have a charity in mind for a portion of that to avoid as much of a potential tax hit potentially.
So you're saying if you were going to sell your business, you get a lump sum.
Right.
You could structure it where you say it's $1 million you're getting for your business. You could say, write me a check for $900,000, make another $100,000 donation to my charity. For as a rough example, is that what you were saying?
Sort of.
Sort
yeah.
of. Sort of, but not really.
Right.
No. What do you mean by considering a charity during the sale?
Yeah. So if you'd structure this with your lawyer or something like that, but looks like we also have a caller as well.
An important caller coming through. We're going to take a pause and
okay.
Go to our caller.
We will now go to the bat phone and say good morning to, I believe, Mr. Dennis Prout, who is absent today, calling in with an excuse maybe. Is that right? Good morning, Dennis.
Probably.
Yeah, well, I sent the teacher in with the excuse, but she said, forget it. You've had enough excuses to last a lifetime. So anyway.
What's Dennis up to today?
Well, Dennis is recovering from surgery and doing quite well, but we thought it'd be better if I not be in the studio at this point. I can drive, but I can't be in the studio, so you know what I mean.
All right, well, now that you bring that up, I mean, people are going to want to know. Surgery, hopefully nothing serious, routine, or what is it? I mean, not what is it specifically,
nothing
but
serious.
Yeah.
It was, is there such a thing as a minor surgery? It was a relatively minor surgery under anesthesia, but
all right,
recovering quickly, but still thought it'd be best I not show up today, which I was relatively disappointed in, Ron. I wanted to be a part of the team to say, man, we wish you so well. Your direct interest in us and in our show was felt from day one, and we just are really thankful and grateful that you've agreed to continue with us after a break of about a month or so here.
Well,
and I remember, man, it wasn't that long ago. It seemed like, well, maybe 6-7 months. We asked you out to lunch, and we're hopeful that you'd continue with us individually. And, of course, the leadership at WTCM said that was all right as well. But we're looking forward to continuing with you. And given the changing state which these guys are talking about of the financial world, as I was listening, honestly, I'm just really excited to continue with you, Ron, and have you with your continued interest in coaching, too.
Well,
as Heidi mentioned on the show.
Well, we look forward to that. We'll have a few weeks. I think you said 4 Thursdays I'll be out of here, but back May 10th, 11th, 12th, somewhere around there. Yeah. I say you'll hear me back on the radio, but not much because it'll be Nathan and Dennis and Heidi and Beth and your guests doing all of the talking and sharing. You'll hear me pipe up here and there.
Yeah, we'll still have those quizzes for you, though, Ron.
All right, I'll do the quiz, but it's still all about Prout Financial Design, New Retirement Radio. So,
yeah, and one last point. Heidi's got some real experience in the industry, in banking as well in Chicago. So you might want to share a bit of that, of your experience with the business world, Heidi, too, and buying and selling and what that was like there. So if you do have a minute, you bet.
Okay. All right. I can add a few things about that, certainly.
Great.
Be awesome. All right, Ron, we wish you the best. And Colleen as well. What an amazing team there. And the number of people that I've talked to in the community that have said, reluctantly, we understand that you all want to pursue, you've got another chapter in your lives, but and they still intend to listen to WTCM, which is fantastic as well, but reluctantly saying goodbye for sure.
Well,
That's such kind words.
yeah, thank you for taking the time to call in during your recovery there, Dennis.
And you were saying a new chapter, and I was like,
Filing
my
nails.
nails. That'll be my new chore for the day, right?
And so to be
Whatever
clear,
that is, huh?
Prout Financial Design will be back next week and every Thursday at 10 for a
That
few
is
weeks.
correct.
Jack O'Malley will be sitting in this chair, Jack O'Malley, and then I'll be back to hang out with you guys here on the radio.
Right. I'm just glad we won't have to miss you, Ron, because we get to see you again, and we'll get to see you each week. So
Thank you.
that makes me feel good.
All right, Dennis Prout will be back in the seat here next Thursday.
Yes.
You bet. Intend to. Take
All right.
care, all. All right.
Thanks for calling in today, Dennis Prout. D. Prout.
Yes.
All right. So you're going to continue with tips on how to sell or things to consider if you're selling your business.
Right. And we were talking about the common regrets, right? And we had the first one, which was the financial regret. So let's go on to the second one, which is timing regret. Waiting until you have a health scare or a burnout and it forces your hand, you may want to avoid that, because in that case, owners typically feel like they sold from a position of weakness instead of a position of strength, because they're sort of forced into that decision. So planning early is one of your weapons against that. And then a third regret they talk about is family regret. You really should tell your spouse or maybe your kids that you're selling the business.
I don't know. Spouses sometimes just really love surprises.
Surprise!
So, you could exactly be like, hey, why are you home today? Oh, I sold the business last week.
All right.
Just an idea.
Yeah. There could be a legacy opportunity, whether you're farming or you have a profession or you have a store. You might want to talk to your family about it and find out their feelings, or maybe some things they would like to see happen. So then let's look at the process, a process for business owners as you're considering this question. And the first one is maximize. If you want to maximize the value, maximize the experience, you might want to start testing the business without you. Let some of your team take over and do some things while you are not there, to try to see the strength of the business. Is how tied is it to you actually being there? And define your non-negotiables. Like, if this is, I am keeping the real estate. Even if I sell the business, I want to keep that building. Something like that. Decide those before you go into negotiation, so you know when that red line has been crossed, right? And get advice. Get coordinated advice. Talk to your lawyer. Talk to your CPA. Talk to your financial advisor. All these people are integral parts of your professional team, and their advice can really help keep you out of trouble and avoid some of those pitfalls. So also, you want to then minimize some things. You want to minimize your taxes. So you want to have a tax plan like we talked earlier. Make sure that it's the most efficient plan for your tax size as possible. You might want to look at your own personal estate planning. How does the sale of the business affect that? Was the business in that original estate plan? You might want to separate some of these things so that they're not tied together. And clarify enough is the next one. It says, have you done the math on what you need after the sale? So that's important. Always know what you need to get out of it to enjoy that retirement the way that you want to, so that you know what you have to get out of the sale of the business to get that. And then the final part that they talk about is optimizing the sale. You want to consider your life after the sale. What is going to be your purpose? What are you going to do after it? And I know we've harped on this a lot on the show, but it's such a key to feeling satisfaction and having feeling better about retirement and that new phase of your life. Is, do you have a purpose? Do you have certain things you want to accomplish? You also don't want to forget about your team back at the business. How's that going to work for them? How are you positioning them for the sale and the outcome of the sale as well? And so you want to design that legacy plan when you're putting all of these pieces together. So that's quite a bit of information, but it's always good when you're looking down the highway to start putting those pieces in and start thinking it through, because we don't want you to have any of those regrets that we talked about.
Funny, we used to do a weekly entrepreneur show, and I talked to a number of entrepreneurs that retired from, executives from the professional positions, and they found out, boy, I'm sure bored and restless here in retirement. They would go buy a business.
Another one.
Yeah, so sometime you can do what to consider when you buy a business.
When you buy a business after you sold your business.
Somebody wrote a little bit of a long one. Let's see. I have been watching my investments and curious about AI and tech stock. However, some recent stock advisors have suggested that the, quote, AI bubble might be about to burst and that we could see a significant drop in the market, 50 to 80%. What would you suggest in order to ride out the drop in the market? Remain even and or even see gains? I want to remain positive. However, our nation debt and recent forecast makes me nervous. So the debt's for real. The other one's a prediction, I guess.
Mm-hmm. Yeah, and that's quite the question.
There's a lot in that one.
Yeah, so depending on, also too, depending on the tech stock that you're buying, so if you're interested in NVIDIA or Apple or Google, I think Apple stock recently bounced because of how much they're not spending on AI, actually. went positive recently for that reason, too. So, it also, yes, how much they're spending on AI comes into play, but how stable they are as a company, how is their outlook, what are they trading at for their earnings ratios and all those sorts of things needs to come more into play for your trust as the company as a long-term play than your trust in what's going on in the world right now necessarily in a lot of other ways.
Do you hear in your conversations in your world any predictions or concerns about the AI and tech market taking a hit?
There are some concerns out there, like the questioner raised, that, is there some kind of bubble that's going to burst, because we've seen such amount of gain in those technology sectors over the last couple of years. And some of that has pulled back this year. Maybe the market got a little ahead of itself, but AI is still pretty strong. A lot of companies are starting to implement it into their operations, and we're starting to see some of that. One thing that people are looking at that they talk about a lot is the certain company you're looking at, are they taking on debt to bring on this AI and the infrastructure needed for that, or do they have the cash reserves already? And so you might want to take your analysis down to a little bit more company specific if you're trying to find a better investment, to see what their financial statements are saying, and do they have a lot of debt, or are they able to absorb those costs?
Yeah, and some of those companies too, I can't name any specific, but they're trading pretty conservative right now too, and they're heavier hitters in that area. So to say that it's overbought or that there's no opportunity for future growth seems unlikely. Obviously we can't guarantee anything that comes with it, but it's not so much about whether AI is a bubble, but the analogy that I've gravitated more towards is AI more of a balloon. So, there'll be a lot of air and whatnot that goes into it, and it might deflate a little bit, and then it might just get refocused and then reinflate, but
AI is here to stay.
yeah,
Yes.
I think that internet thing will stay around for a while still too, but we'll see.
It's just
All
a
right.
fad.
But yeah, that's also a really nice segue into our next topic here, which is a game plan for market corrections. And man, what a week. And
Yes, indeed.
I feel like we've been able to say what a week for the past several weeks, with the Iran conflict in focus as well too. But holy cow, what a week. So this article, we were reviewing it on Monday, and parts of it felt a little more relevant than they do at this moment. And let me just open with parts of this paragraph here. So after setting new all-time highs in January, the S&P 500 index has been declining for several weeks and nearing the threshold of a 10% drop, which would be in the neighborhood, just for reference, of about 6,300. Because we did see on the S&P, because we did see the S&P go over 7,000. I believe it was in late January there. In March 30th, we were almost there. We were at like 60. Ron has the graph up right now. We were at 63.80 or so, 63.40, I believe is what it was. So we were somewhere between 40 and 80 points from technical correction territory. And then March 31st, there was a big bounce back. And then, of course, yesterday was another large bounce back.
Which makes me think of what we talked about over the last couple of weeks about if you miss the 10 best days or all of that. So those days, you never know exactly when they're coming.
Correct. So corrections, of course, can be unsettling, and many investors find it difficult to stay the course when stocks are declining. But they can also present opportunities for investors. So knowing what typically drives them and how they have tended to resolve can help you navigate them with confidence. So here's our quiz question for you today, Ron. How unusual are corrections? So since 1980, the S&P has experienced a drop of 5% or more. In what percentage of the calendar years would you guess, Ron?
The S&P index dropped 5% or more. In what percentage of the years since 1980?
What percentage of the years since 1980?
So that's 20. That's 46 years. I will say 5%. 46 years. I'll say 20%.
93% of those years.
I was going to say that.
You were close, right?
Yeah.
And has experienced a drop of 10% or more in 48% of those same years.
Almost half the time. And looking back, I mean, I was surprised when I read those figures as well, because it seemed, wow, 98 or 93% of the calendar years. So there's a lot of volatility out there.
Right. And here comes one of our favorite sentences. Past performance is no guarantee of future results. But the biggest drops, of course, refer to from peak to trough in the S&P 500 during each calendar year. So despite those frequent declines, the market's average calendar year return over the same period has been a positive 13.3%. So how long and deep is a typical stock market correction? It's impossible to know how long it may take for stocks to recover their previous highs and for volatility to subside due to the inherent unpredictability of future events.
Doesn't it seem like investors are just waiting to pounce and buy, like yesterday? Once they got news that the Strait of Hormuz might open, oil's going to flow, bam, the market jumped up.
Yeah.
And when they say it's closed, the market dips. It just seems like they're optimistic. Like all we need is the oil to flow and things are going to be great. It seems as the what I see.
Yeah, and it seems like everybody is almost a little bit on the sidelines right now too. Like, well, because right now, last I knew, everybody was pointing fingers at each other between Iran, the U.S., and Israel about who's violating the ceasefire. I don't know if it's fully collapsed yet, but if it does, I imagine that would cause the market to shed some of those gains yesterday. But right now, it looks like the market is just waiting for the next bit of news, because it's so far today flat to maybe a little bit negative.
Well, the market really doesn't like uncertainty, and they're always looking ahead. They're always looking at the next thing.
But they also say the market climbs a wall of uncertainty.
Yes.
So historically, the market has typically recovered quickly from corrections. So you can see it's not uncommon, if everybody can look at my chart here, to experience significant market declines. But the market has still recovered and produced positive results in most years. So, since 1980, the S&P 500 index has experienced a decline of about 14% on average in any given calendar year, says an institutional portfolio manager with Fidelity, actually. Yet stocks have normally recovered and finished with average gains of about 13% in any given calendar year, including dividends. So a market decline of 10% or 15% isn't unusual, nor necessarily a sign that stocks will continue to decline. Market volatility can feel unsettling, but it is normal. So what if this time is different?
That's always the question.
Exactly. Yeah. And sometimes it's helpful, may not be for you, but sometimes it's helpful to just follow that line of thinking, like all the way down, like rationalize it all the way. So what if this time is different? What if we kick off another world war? What if this is the end of America? I don't know what your end game scenario here is, but what if it is? And then are you really going to look back and be like, man, I should have invested differently as you're planning for the fallout? Or are you going to continue to plan for retirement? And that too really comes into focus more with your retirement income when you're depending on your portfolio for these withdrawals. And that's why it's so important to have different buckets set up, even for your different years. So where is my next 5 years of income coming from? What about the 5 years after that? What about the 10 years after this bucket? And that way you're not, hopefully, worried so much about the volatility, because you're only watching the extreme volatility in those buckets that you don't need any money from for at least 10 years in an ideal scenario.
And Nathan, that's like a real big difference between like before you retire, because then you're just trying to build as big as you can, get that growth, put that money in, build that nest egg. And then you turn the corner and you retire, Ron, and you're like,
hypothetically,
okay,
yeah.
Hypothetically,
Yeah.
I need that income that's not coming in anymore. And that's what Nathan was talking about, is having a specific use for different parts of your portfolio. We always want to protect that near-term income stream so that we don't have to worry about, whether the port opens or it closes, because we've protected that.
So you talk about saving, getting that big egg built up.
Yeah.
But and people might think of the retirement account as that, but when you say drawing from different aspects of your portfolio, people might not have considered that. What would be different examples of where you might draw from for 5 years and then draw from here for 5 years? What are the different elements of a portfolio?
Mm-hmm.
Well, depending on your risk tolerance and many other factors. So let's use an easy example and say that you had only been investing in an S&P index fund as you saved for retirement. And let's say you built that to $1 million, a nice round number. Good job. But now it's time to start drawing from that. So this is where you might want to diversify and say, hey, I know I need X amount per year, or maybe you're waiting for your full retirement age for Social Security. So maybe you do have a larger income gap for a couple years while you're waiting for that Social Security benefit to grow a little more. Then you could say, hey, I need $60,000 a year. I'm going to set aside roughly 120 or 180 in more conservative investments. So right now, maybe treasury bills are a good opportunity for a larger portion of that. Not setting your world on fire with what they're returning, but they're also not going negative either.
Yeah. Okay.
You know, so you can still earn a little interest while drawing, you know, that income from there, and then maybe you set another portion in, you know, a moderate conservative to a moderate investment, and then the rest of it is still that aggressive, because that aggressive bucket, then you want to look at market opportunities to potentially take gains from that and just fill back up your other buckets.
So it's just not one big bucket. You can split it up, as you said, different risk tolerances depending on where you are.
And different timelines for each of those buckets. Like, you know, when are you going to need that money?
Or planned renovation, you know, planned vacation, you know, maybe you're doing something crazy and going to Switzerland or Austria or something like that,
you know, taking a big trip and need to bring back a lot of souvenirs for all your friends.
Chocolate. All right, we have on the text line for our panel today from Prout Financial Design. Since some of these large swings in the stock market are made by programs analyzing data and either buying or selling stocks, is AI now involved with the buying and selling of stocks? Is there any kind of AI setting that just buys and sells?
Well, I'm certain I don't know all the technology that goes with it, but I know part of AI in the financial realm is suggesting different portfolios. And those get put automated where it buys and sells based on different movements in the market. So it can be involved in that process.
I'd
to
be
a
a
certain
little
extent.
surprised if it was quite yet, because the systems that the markets have in place for those large buys and sells are very tested. Like they can't make mistakes. They can't hallucinate, you know, or anything like that. So
didn't they, after one of the big drops, like maybe 10 or 15 years ago, there was some automatic computer settings for the buying and selling, and didn't they change that and put the brakes on it?
There's different safeguards that are put in place in the market. So like if there's a big run, it slows it down or it pauses
the market might just close early that day.
So, but those safeguards were put in place after some of the more painful experiences in the market.
That's right. So, continuing on here. So, where were we?
We were looking at...
Yeah, anytime the market, of course, enters a pullback, some investors start to worry that this time is different. So in the midst of uncertainty, it's natural to fear the worst. Yet investors should remember that historically, the U.S. economy and stock market have again and again surmounted deep obstacles, including things like pandemics, recessions, market bubbles, and even a depression, and eventually gone on to thrive.
Yeah, I mean, I think if you think back, we can sit here and we can even think of, I can remember Brexit was a big deal, and then we had COVID, and then we had the Day of Liberation, and all these things where it's just like sort of a big dip in the market, but then it recovers quickly. So there's always something new that's never happened before.
Yeah, and it may also help to remember that markets can react to news headlines and emotions in the short term. You know, we've seen that just this week. You know, prime example is yesterday. But over the long run, stocks have usually risen if corporate profits are growing. And that goes back even to that earlier question. How much faith do you have in the company that you're investing in? What do their financials look like? Not just, hey, are they one of the ones on the forefront of the AI bubble right now and I want to invest in that? And that can be good. But digging through those layers to see if it makes sense for you, because you want to buy and hold. You know, you're not looking most of the time for those day trader opportunities. So what this means for investors, while it can take nerves of steel not to react when stocks are falling, this has often been the best course of action. Investors who sell in an attempt to head off further losses, risk locking in potential losses, and often miss out on the market's subsequent recovery. So again, if you had sold off at the beginning of this week and you're like, I've just had enough, you would have missed yesterday. And that would have been
sad.
A good chunk of your recovery, potentially. So here's how to think about your potentially best course of action. So long-term investors, stick with your plan. If you are saving for retirement or another goal that is years away, the time to consider how much of a loss you can handle is not during a correction. Rather, you should consider your appropriate risk level for your own portfolio when you are looking at your long-term goals and thinking clearly about your financial situation and your emotional reaction to risk. And, we've used, at least 5 different risk tolerance softwares, even in our own office. And it just makes me think of this one that we really like that we're using right now. Don't worry, I won't plug it specifically. But it really tests that. It's like, hey, what's your risk level between 1 and 10? And people are like, I don't know, a 5. And then it's like, all right, so based on your whole portfolio of $200,000 then, are you really comfortable if the market goes down this much, if your portfolio loses this much value overnight? Mm-hmm. And then people really, it really connects that dot almost right away. And they're like, you know what, I'm not. And then it dials
I'm not
it back.
a 5.
I'm not a 5. And it dials it back and it asks the same question 4 times. Mm-hmm. Starts to feel a little bit like an eye test after a while.
It puts a dollar amount on it, right?
Yeah.
Right. More reality. Yeah.
Do you recall, or if you were there during COVID, the early days of COVID, the big crash?
Yeah.
Did you have a lot of your clients or people panic?
Yes.
And abort?
Yeah, we had a lot of phone calls, and it would be, well, I wouldn't say they were panicking because they did call us to get our advice. But what I heard a lot was there was a lot of worry, a lot of concern, a lot of people like, I want to pull everything out of the market and put it in cash, and just talking through some of these ideas with them. And that's why we try to be proactive. Like Nathan was saying, we protect that income stream so that we can time when to get in and out of the market without a negative consequence. And it's really that diversification, the different assets that you have in your portfolio, and those timelines that you've set up. So protecting the near term so you can pick and choose when you get in and out in the long term.
Yep. So really, it all comes down to the fact if you haven't created a plan, you should. And if you have one, it may be worth checking in to see if your investments are still in line with that plan and if your plan continues to reflect your investment horizon, your financial situation, and your risk tolerance.
A few minutes remaining. Let's get a question here. Someone asks, should you be fully invested or should you have cash on the sideline to buy market corrections?
So it depends.
Yeah.
But depending mostly on your risk tolerance and your time horizon, even if you are fully invested and believe that we are in the full trough, if you will, of the market correction, now can be a great time to consider something like a Roth conversion and convert those shares in kind. So you're maybe not even selling anything to do that. And then have them in your Roth to ride that wave back up, potentially. So, but yeah.
All right, let's. We have. Sometimes people voice text. We don't get the full gist of. Doesn't come through, but we'll see if someone says, "I have a company that has my client base. Something clients. I heard it needs to be a service contract. My thought is to bring in a new owner as employee." So it sounds like it's so he can get to know the client. So looking at a potential new owner, bring him in as an employee to get to know the current client. Sounds like that's the question, the gist of it.
Well, that can all be part of that discussion when you're selling your company, is how that's going to look. And something that we have seen repeatedly in these situations is where the owner stays on for a while or a period of time after they actually sell the company to the new owner to sort of transition the employees as well as the clients or customers of that business. You want to have that retention. The new owner has a vested interest in retaining the employees and their skill level and the clients that are already established. So a lot of times there'll be that period of time, whether it goes for a short period of time or, you know, we've seen a number of years, 3 to 4 years even, where that former owner is there sort of shepherding and mentoring the new owner so that everyone can feel comfortable and be happy with the situation.
All right, we're going to go over to Beth Shire, who has some information for us.
Yeah,
and
so-
maybe a stat, too.
Well, I'll sneak in the stat first. March, hiring picked up, and the U.S. added 178,000 new jobs, which is
good news.
It exceeded expectations, and the
Does it say what the expectations were?
no, it doesn't. It was
But it exceeded them. Okay.
which is great. It's always a great.
It
place
was
to
lower,
be.
that expectation.
Remember, February
it
was
was
down
170.
like about that much.
Right,
Yes,
yeah.
it was pretty bleak. Absolutely.
ProutFinancialDesign.com. That'll wrap it up for us today on New Retirement Radio with Heidi Cartwright, Mr. Nathan Prout, and Beth Shire. Thank you all